Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. And our guest for this week's show is real estate investment expert and CEO of Primior, Johnney Zhang. Now, for over a decade, Primior has been offering a full suite of asset management services to commercial real estate and hospitality owners and investors. As a merchant developer, Primior creates value through site identification, procuring optimal entitlements, and directing the design, construction, operations of assets positioned to meet the needs of the market or user. Primior has grown throughout the years as one of Southern California's leading luxury real estate and hospitality developers, spanning a variety of residential and commercial neighborhoods. And so, guys, I'm excited to get on the show with Johnney. But before we do, just have a few quick housekeeping items to run through. First and foremost, if you haven't done so already, head over and grab a free copy of my recently released best-selling book called The Cash Flow Investor: How to Create Financial Freedom Investing in Commercial Real Estate. The book released a few months ago in print form. You can go buy it on Amazon for $20, or for my tribe of cash flow investors here at the Real Estate Investing for Cash Flow podcast, I've made a free PDF version available that you can go grab a copy of by going to kevinbupp.com/free book. Again, that's kevinbupp.com/free book. Moving on here, if you're an accredited investor and you have an interest in partnering with me and my team, with the number of projects that we have working at the present time, you can head on over to investwithsunrise.com to learn more about these various opportunities. And guys, not only do we have a stout pipeline of active deals in the works right now, but our current offering, which is the SCI Growth and Income Fund 3, currently has a number of seed assets already in there, and also roughly $20 million of sweat equity that we've already built since its inception, roughly a year and a half ago. Again, this opportunity, it's limited. And so if you want to invest in deals that already have cash flow in place and are providing quarterly distributions, head on over to investwithsunrise.com to get more details on that. And now with that, guys, I'd like to welcome our guest, Johnney Zhang. Johnney, how you doing today?
Good. How are you, Kevin?
I'm doing great. Excited to have you here. Appreciate you joining us. And I gave you just a brief introduction there. Obviously, your background's much more extensive than that. And so, what I love, Johnney, what I'd love for you to do is for those that are listening that aren't familiar with you or your company, maybe first start off by telling us a little bit more about your background from a personal side, and then ultimately what it is you do at Primior.
Great. Hey, hi guys. My name is Johnney Zhang. So I'm born and raised in Wuhan, and went to school in England. Mm-hmm. So I came to the United States about 2012. So started Primior in 2013. So it started as a construction company, but then we slowly evolved into our development asset management company. So today, Primior manages over $400 million assets, half of them are in developments, half of them are stabilized assets. So what we specialize is to maximize the property value. So I'm always a proactive investor or operator. I like to look at ways to increase the property value instead of buy and hold, which I believe is still the best strategy, but I like to find ways to increase the value as well. So that's why I fall in love in developments. So there's nothing better than creating something out of nothing, right? Mm-hmm. So bare land, create something new. It's a little bit risky. So a lot of our investors don't like development. So we have another side of it, helping investors with existing properties to increase their value by, optimize the lease, get better tenants, fix the deferred maintenance, have proactive maintenance schedules, and then also try to reduce the expenses, things like that to increase property value. Of course, on the finance side, try to get better loan terms, things like that.
Mm-hmm. Got it. And so did you start Primior directly out of school, or, what was the evolution there?
No, actually. So while I was in school, I actually started doing investments. Back in England, actually did some property flips, and then I always like real estate because my family was in real estate business. They're not a developer, but they're in real estate lending business. So I always like this kind of thing. Like real estate, I believe in the long-term value. Real estate doesn't matter where you are. Real estate is always the best asset you can hold, the most stable asset you can have. So, and when I got to America, the first year, I literally just spent the whole time learning about the market, everything. Then I decided that I need to get into construction first before I get into real estate, because I need to learn how things are built here. The building cost is different, labor market is different. So I want to learn. So I had a partner actually, and initially we formed a construction company with a lot of home remodeling. That's how we started.
Okay. Okay. Fantastic. But you always had the bigger vision, right? And I was going to ask you about the history and the evolution of Primoor. You started as a construction company, but was the larger plan, was it always to get it to where you're at today with asset management and development?
Yes, yes. Well, so the way I think about real estate investing is, well, you need money somewhere, right? You make money somewhere, then you have savings, then you invest in real estate. Real estate is a buy and hold long term. You can't really create a lot of cash flow out of it. It's like stable, really stable, appreciating, but you don't really get it so rich so quickly out of real estate. So I was like, I need a business first that can generate enough cash flow so I can keep investing in real estate, right? So I started construction because it's related to the real estate developments. Then I make good money on the construction, but then it also give me knowledge, like when it comes to, hey, improve the property value. Well, you always have to do remodel, facelifts, renovations, TIs for the tenants. So that actually give me a lot of insight, a lot of help when it comes to, like, in the future when I do my own developments or do my own property improvements.
Yeah. So you had a fairly quick trajectory from the moment. I'm trying to find a timeline on your website that you guys actually that you founded the construction company. It was 2013, correct?
Right.
So
That's right.
that's when you started, and it, again, you started the construction company because you need to create a business that actually provided cash that you could ultimately then turn around and reinvest. But it seems like it's been a fairly quick progression from 2013 to what you guys have grown in today. Talk to me about some of the bumps along the way, some of the challenges that you faced as you got into development. And look, shortly 2 years after you guys got into the construction side, you got into development and then continued evolving the company from there forward. So talk to me about the growth of the company, the challenges that you face, and ultimately how you overcame them.
Right. So we got in construction, we make good money. Then I'll just say, like my passion is in the real estate, investing and development. So I want to start doing that. So what our company start existing, we start doing construction, we start making money there. But my focus has been shifted to developments. So I started my first flips in 2015. I bought a few houses, bought the land. Then I started doing the entitlements, and then the housing I bought doing flips. So I was working like 3-4 single family project at the same time. Was my first development portfolio here in America. The problem is that I don't know that in America you need neighbors agreements to do any development. So I didn't know this thing called public hearings, because in especially in China you don't need that, right? You got the government approval, you're a go. You don't need neighbors' opinions. But here's different, right? So the first public hearings, I got 30 neighbors showed up voting against my project. They got shut down. So, so I have to go back to because it was a tore down. So I was going to tear down the house, going to build a new 3,000 square foot single family house. I'm going to sell them. But then I found out that, oh, I can't do it. So I have to go back and redo my development plans. So, okay, well, this time I'm going to remodel it. I'm going to expand it a little bit. Then this time I door knocked. I literally went to all the neighbors that voted no to me. I talked to them in person. Said, look, I'm not going to do the 3,000 mansion that call you mansion in the neighborhood, and I'm going to do a remodel. I'm just going to expand it a little bit. Would you agree? They all agreed. Then this time I got it through. Then I did it. I flipped it. I made small money. I was going to make a lot more money, I thought, but at least I didn't lose money. I make small money. It took me 3 years to get through that process.
Interesting. So, what were the biggest complaints of those 13 neighbors of the tear down and rebuild? Tear down and build new versus just the remodel. I mean, what were the biggest complaints that you found?
For me, it's kind of nonsense. Okay, we're on the small alley. All the neighbors one story, right? I want to build 2-story. So they go, well, you encroach my privacy, but I can already see your backyard without a second story, right? So I'm like, I offer to give them trees to plant the trees to block the privacy. Just say no, I don't want it. And they go, I'll talk to local real estate agents. Then, they said if you're build a mansion, you're gonna decrease my property value. For me, it's like, that's nonsense. If I sold it for a higher price per square foot, it's gonna increase your property value. Yeah. Why the real estate agent tell you like a different way? I don't know. So I couldn't make sense with them because they came to game too late. I didn't communicate with them first. So when they talk to me, they're all like in defensive mode, right? So that was not a good way. But then it got better because they won, right? Then they're more steps openly to talk to me. So I learned from that, like moving forward, every development project I do, the first thing I do, I talk to the neighbors.
Yeah.
I tell the neighbors what I want to do. I give them choices. I tell them, hey, look, I'm here to make money. That's right, but I'm also care about local neighbors' opinion. I want to boost your economics. I don't want to, come here to be your enemy. So why don't you work with me? So I do that every single time when I do developments. It has been really good.
Yeah. So that, I mean, but that's one of the big hurdles, the neighbors. But then, talk to me about the hurdles associated with, I mean, it's just, as you were getting started, some of the challenges associated with the city government, right? The city council and the various departments that one has to get approval through as far as your site plan is concerned. I mean, I'm assuming there was probably some learning curves there that you went through.
Definitely. So, if you, I know other states, maybe other states will be easier. I heard Texas are really easy to get approval. They encourage you, they're pro developments.
Yeah.
In California, especially LA, there is not so much, right? The governments are so bureaucratic, they're really slow. So sometimes they work through the hurdle. It's not like they don't do things that are really, really slow. So our this project, particularly in Dana Point, I bought in late 2014, is a land we're doing a big development. So it's ultra high-end customer homes. We projected it was going to spend $30 million to build that project. Of course, I think investors. And today, because everything increases, it's going to cost us $15 million. It's a 19,000 square foot on a 15 acres land. There's no HOA. It's not a PUD. So it's all raw. So we have to go through not only the city, but the California Coastal Commissions, because where is the coastal city. So that is a nightmare. Before I bought that property, I've never heard about California Coastal Commission. Like, I don't know what that day. Then I learned that you can't do anything without their approval. They literally report directly to the governor, and a lot of the board members are appointed directly by the governor. They don't report to any local cities or counties. They still stay directly. The city that actually won't give me any approval until we have their approval. So I would work through them. But the problem about them is that one office in Long Beach that do everything about LA, all the way down to San Diego. So they're really, really busy for a really small office. You don't get any response from them. You email, you call, you go to the office, visit them, you just don't get any response. I'm not going anywhere at all. So then I was calling around. After a few months, I finally found a consultant who was able to help me get through, because they had a relationship with the coastal commissions. Then that's how we got them to even respond to us. Right? Then to get through the approval was another hurdle. It took me 6 years to finally get entitlements from Coastal Commission and the city of Dana Point.
Yeah. So the reason I asked that part of the question was, and I think you tied it together, which is it's all built around relationships, right? Being successful in development and actually having an efficient process, as efficient, I guess, as it can be. Some states and municipalities are less efficient than others, as you've conveyed. But really, what it comes down to is relationships, really tight relationships, or working with a consultancy firm that has those existing relationships that can help get a project pushed through much faster than that of someone that doesn't have that relationship already pre-existing, trying to, just really run up against a brick wall and break through it is essentially what it sounds like. It was what you were doing before you had that consultant come in. So
exactly.
Yeah.
I learned all that in the hard way.
Yeah. And so that project, you said it took you 6 years to get the entitlements?
Yes. I started construction in 2020, and they're starting construction now. It's not going to take another 2 years to finish.
So talk to me about I'm assuming you had investors in that deal. I don't know, through the entirety of that process, what the expenses look like. And so talk to me about just managing investor expectations, lender expectations while you go through this incredibly lengthy process. And how do you mitigate that risk, knowing that you've got such a long runway in front of you before you get to the finish line?
So that project would not be a perfect example to manage your investor expectations, because the investor are family and friends. Okay. So largely we're just doing this together, right?
Gotcha.
So it's not like for like other investors, like, hey, what the hell is going on here? You promised to get it done in 3 years. Now it's like 5 years where we are. We don't have that problem, right? We don't have a loan as well. There's no debts on that property, because we don't have that lender problem as well. I can talk about other projects I have a problem with the lender. But this particular project, I don't have the problem, so I'm really fortunate about it. But the project, I do have to deal with the budget increase, right, from $30 million to $50 million. because of the COVID, inflation, everything. But at first, I guess 6 years, we don't have to spend that much money because it's land, entitlements, architecture costs, everything else. But when everything started, the land is 15 acres. So we're doing, it's on a hill, so there's no road. We have to build a road. The road is like half mile long, so we have to build like a retaining wall that's 30 foot high, and we have to build multiple retaining walls. And during the process, we're moving dirt around, so we have to have a soil engineer on site 24 hours, and we have to have like basically test all the soil, make sure they're stable. We found a lot of soil will have to replace, export it, and import it. So that incurred a lot of costs. Our change order alone like $2 million just on the soil side. So that's the part that it can't, nobody knows what's going to happen until you start moving the dirt, right?
Yeah.
That's the unexpected part of it.
Sure. And then you made a mention of COVID and just inflated, material costs, labor prices. And so we have that, right? Like you've got some projects that ultimately have been impacted as a result, as does everyone else that's in, whether they're development or just real estate in general, depending what phase that you're in of the process. So in addition to those two items, now we've got just massive volatility with rates, right? And depending if you're currently working through a deal right now and you had pro forma'd out a particular takeout rate on debt, and now it's changed substantially over the last 6 months. How are you managing again all those variables that have come into play in the last 2 years?
So I think this is temporary for me, right? Because my development cycles typically in California specifically is 3-5 years. So it's going to be high. So I try to get a fixed rate right now, so I don't get adjustable rate. So then at least it's high. At least I can. There's no uncertainty. I know this is going to be the rate for the next 2 years. I can project it. I have enough funding reserves to fund it. And then I think, in my opinion, in about 2 years, so start 2014, this market is going to start getting better. So by that time, my development will be done, because a lot of my developments will be done until 2025 anyway. So by that time, I was hoping the market will be better.
Real quick, what do you mean by that? It'll get better. You mean like they'll have to start backing off on the rates and bring them back down to reality?
Yes, that's my projection.
Yeah,
because they can't keep increasing the rates, because the whole reason they increase the rates is because they want to combat inflation, right? When there's no money floating around in markets, I'm afraid we're going to go to the deflation market. So that's right. And then they're going to have to do something else to push the market. So I don't think this is going to last too long. We're going to probably enter recession really soon. I don't think this is going to last really long. It's just my personal opinion.
Yeah, no, I have to agree with you. I'm not an economist, but I have to agree with you there. So again, back to the company and the growth trajectory. So it looks like you brought development in-house 2015. You brought asset management in-house 2016. Architecture, you hired a team of architects in 2017, 2019. What's this? You guys acquired an investment bank, and so you've had a lot of things happening. And then leading up to present date, you guys have a blockchain technology that I don't know if it's launched yet, and we can speak to that. But really, I want to talk about all the additional verticals that you brought into the company, and again, just really challenges associated with that, but more so the benefits of why you decided to bring a lot of those things in house.
Okay, so I started obviously like just any other typical developer. I outsource everything. I run really lean, right? Just build man people, then you run everything else. You sub out the architects, you hire architects, hire engineers, hire a construction company, you hire property management company, you work with brokers on leasing and sales, right? Then you work with loan brokers on finding loans. What I found out is I was never on their priority. I'm not large enough on their priority. They always have other clients that are more important than you. So when you try to gather, imagine trying to get 5 consultants, just 5, all together on a phone call. You have to schedule them 3 weeks out because everyone's busy. You can't never find the same day to get them all together. The architects, structure engineer, MEP engineer, and sometimes the city involved. It's just really, really hard. And especially you want now, if you do development, you will know that the architects and the contractor always butt heads each other.
Yeah.
I've had a project where the architect basically gave up, refused to talk to contractors during the construction project. So because of the country always have to submit FAR to architects, they have the answer. They all say, "Oh, it's your fault. You didn't do the plan right." You gotta say it's your fault. You can't even read my plans. So there's always butt heads. At the end, I'm the one that paying everything. So I have to come in solve the problem. So I personally brought in architects just in hopes that I can solve that problem. So if they are working together in the same office, then if they can like they can work as a team, it might solve the problem. They still have problems about each other, but it's a lot more efficient, and we don't have that much you point fingers things anymore. We still have a little bit, but mostly I see the efficiency just go up. It's a lot better for me. I can manage a lot better.
Yeah.
Plus the cost wise, hiring outside firm versus hiring in-house team is a lot cheaper.
And so then I guess with all that being said, then your project flow is, I mean, it's pretty consistent in nature, because ultimately you've got to have, new projects coming to the fray in order to justify that additional overhead. And it sounds like you guys are at that point now where you're going to continually grow and be steady with, with your growth strategy. Correct?
Yes. So we're still relatively small into the department, but the vertical integrations really gave us the a lot more efficiency and cost wise, right? We can save a lot of cost, and we also offer those services to other investors, because we have a lot of investors who have land and they develop, or they have a property and they need to help us to improve the property. When you do anything you do on a commercial property, you still need architects, right? They need to draw the plans, anything, even TIs. So having that team in-house really benefits not only me on my development project, all my investors too. They love it.
What do you think, in the next year or two, like what is the next vertical you'd like to bring in, or, the next position or vertical or something that is still being outsourced that you would like to bring in-house? Like kind of what's that next step?
The only thing that we're not really bringing houses is the sales, right? We're still working with a lot of local brokers that find and sell the property. I don't see myself even wanting to go that route, because we still need a lot of resources from those brokers to help you bring the deal. So you can't do everything yourself. That's the only thing I didn't bring in house. I don't plan to bring that in house.
Yeah,
but everything else we have from development team, from then to design, entitlements, construction, property management, leasing. We even do leasing in-house, and now we can do financing in-house because the investment bank we have. So we're pretty much all vertically integrated. So I'm really happy where we are.
Yeah, no, I asked that question, and I know where we're at within the growth of our business. I think one of the next things that we'd love to bring house is legal, if at all possible. That would be the next big jump for us, is actually have legal counsel in house. So, just looking at
I do have legal counsel. So
you do, yeah, that's fantastic. yeah. I'm jealous. So let's switch gears a little bit. Let's talk about some of your latest initiatives, more specifically USPC. Tell us, what that is. How does it work? What problem is it solving? And we can go from there. But I'd love to, share a little bit more about that initiative, if you would.
Okay, great. Yeah. So talking about USP is I'm really excited about it, because I launched this project earlier this year. There's actually a pre-launch, the official launch later this year. But I've been started to study blockchain, Bitcoins, everything since 2012. I have other friends around me that trade Bitcoin. They made a lot of money. They lose some money. They've been telling me, "Hey, Johnney, get into it, buying Bitcoin." So I started looking into it, but I'm always struggling to find intrinsic value behind Bitcoin. I'm like, this is great, decentralized, peer-to-peer. This is all good. I love the technology. I don't like the fact there's nothing backing it. Now there's people say it's digital gold, because there's scarcity, but I'm like, yeah, but there's no utility. You can't do anything with Bitcoin, right? It's so good. People are now using Bitcoin to transfer money, so that's some sort of utility. But I still struggle to find the value behind it, because when you're even investing in real estate, I can see fundamentals. When you invest in stocks, I can see fundamentals. Sure. I can't see fundamentals on Bitcoins at all. So that's my problem. So then I started looking. There's any other coins have the fundamentals. Now I've started seeing security tokens, asset-backed tokens. I've seen them, but none of them really have any attractions. And then I started looking into why, right? So there's a lot of problem, like you just mentioned earlier, it's legal. There's a lot of legal problem here in the United States. If you're being a security token, you're regulated by SEC, and if you don't, then you're gonna be in trouble. And a lot of these other tokens, they're not categorized as a security token, so they can get away from SEC. So the compliance cost is really, really high if you're being categorized as a security token, right? Another thing is, crypto community has not been accepting to a security token. I once talked to a big crypto VC and they're in a local event. I'm like, hey, I'm thinking about doing these coins. What do you think? He goes, well, I don't like it. I'm like, why? You go, well, I like those hype and dump projects because you can make 1,000 returns overnight. Your project is good, it's stable, but you have a ceiling. You can't make 1,000 returns. I'm like, yes, you can, but it's stable. He goes, I'm not looking for stable. I'm looking for the hype and dump. I'm like, okay, I got it. You're a one investor. I'm going to move on. So So there are people like that. I'm not saying everybody, but there's a lot of big chunk of crypto investors are like that kind of people. They're not looking for stable. They're not looking for safe investors. They want those risky investments. They want speculative. So those are not my investors. But being a real estate native, I always think there should be something that has tied to real world, has intrinsic value. So that's why I created USBC. So the short for United States property coins. So in order to be compliant with the US laws, I have to spend a lot of money to rewrite the smart contracts. But essentially, is income producing property in the high demand markets in the United States that backing a cryptocurrency. So every cryptocurrency, that is security token, is representing a share of a company that owns hundreds of thousands of real estate. So I started the company early this year. I wrote a white paper last year. I published a white paper early this year. I started the company this year. I contributed one of my property into the USPC. So USPC now started with the $10 million assets and multifamily assets, civilized asset in the USPC. With the technology I built, USPC is fully compliant with its SEC law. So we're using exemptions right now, like you say, credit investor, they invest in the private placement round. But my goal is to allow all Americans to own these tokens, because I think this is the best way to store value. Yeah. Think about it, inflation is so high, you have nowhere to put in money. A lot of people cannot afford to invest in real estate. It's too expensive for them. It's a barrier to entry. It's too complex. So they can buy REITs. But again, if I compare REIT to USBC, USBC is decentralized, not a financial system. You can transfer peer to peer 24/7. You have a possession of your shares in your own wallets instead of REITs. You have to buy through a brokerage. You don't even own it, right? So there's a lot of benefits. I have that in the listing white paper. But in general, the goal is for every Americans to eventually can have alternative choice. Hey, I want the real estate exposures. I want to invest in real estate, but I can buy USBC as a store value. It's totally liquid. So that's the thing. That's what real estate investor, my real estate love about it. Goes, hey, I'm investing in a fund. I'm a credit investor, but I'm locking 5, 7, 10 years because, as we all know, you can't buy real estate sale tomorrow. It's a long-term commitment. But if you tokenize the shares, now they're liquid. Can be traded on the secondary market, on the token market. Now you give the investor liquidity they want, and you and I, as a real estate operator and a fund manager, we can literally have an evergreen fund. We don't have to worry about selling the property in 5 years to redeem the investors. That gives us a different, I guess, a choice that we can do. Actually, we can plan for longer terms in investment. For example, as we all know, compounding returns is huge. It's one-third of the world. So the longer you hold the real estate, the more money, the return that you have. So these give their investor the liquidity, and it gives the fund manager the ability to hold the real estate as long as they want.
So you had mentioned USBC. It's got 10 million. It's backed by $10 million of assets. What is it? Multiple assets? Is it one particular property?
There's one multi-family asset I built it myself from ground up, at least to a co-living tenants called Haven in Venice Beach. So Haven is actually funny. They actually they're specialized in turning a property into an affordable lifestyle property. So instead of, say, a Venice Beach, you want to rent a house, it's like 15,000 square foot. It's $15,000 a month. You have to pay security deposit, then you have to have good jobs. So a lot of millennials or Gen Z, they can't afford. They don't have $30,000 to put the first month payment and deposit down, right? But the one living in Venice Beach, you go to the apartment, it's still like $4,000 or $5,000 to live in there. They actually was able to remodel the place and then put multiple bunk beds in the room. So you don't have a privacy, obviously. You have a little curtain to cover you up, but you have their community you can live in. You pay $1,000 a month and there's no security deposit, right? It's month to month. And you can live in community where you have a shared kitchen, shared gym, shared workshop. You have a whole people that in your age group can hang out with you. It's right next to the beach. You can go to the beach in 10 minutes. So you can have the lifestyle, have the community, and be affordable. So that's my first seed asset. I think that actually in lies with the community that I want to attract by USBC. Those are the young people who was starting up, struggling, but they want a good lifestyle, but they want something more affordable. So USBC, one of the USBC's mission is actually to become one of the biggest landlords in the US, then provide affordable housing solutions to the American people. And it's because every token is representing a share, so everybody have a voting right. So it's actually
Yeah.
going to be decentralized, so owned by American people as well.
Mm-hmm. How has the adoption been thus far?
So we haven't do the official launch yet. The official launch will
Okay.
be in November. So the November launch will be the one that open for everyone.
Got it.
Everybody can buy it. So my goal is to allow the non-credit investor to buy it. Right, that's my goal. So my other product, Primior, has all been credit investor only. But this USBC, I'll make it accessible to everyone.
Mm-hmm.
So the official launch will be in November. Anybody can buy it as non-credit investor. We'll start talking with some crowdfunding sites because to sell this to non-credit investor, you have to go through security laws. And the first thing you do is to have to find a crowdfunding site to sell it. So we're choosing a crowdfunding site partner to sell them. We sell up to $5 million of crowdfunding to non-credit investors. We're right now doing private placement where it's ongoing right now, where you have 20, $30 million commitments already. So we're doing really good. We have a lot of really good response feedback from our traditional real estate investors because they like the liquidity part. They go, oh, this is just like what I used to do investment, but I lose liquidity. I don't have any other funds. So no brainer, right? So
talk to me about
investors, they love it.
Yeah, talk to me about the strength of that secondary market, the liquidity. Like, how, I'm a neophyte when it comes to the blockchain and crypto, and so like I don't have a firm understanding of that market and how liquid is it really. And if I decide tomorrow I want to, I'm in this, I want to get out of it. How quickly can I get out of it?
So okay. So if you come, let's put the REITs aside. You can REITs is totally liquid. But let's say private REITs or private real estate fund,
Yes.
right? You're locked in 5, 7, 10 years. You can't really get out. There's nothing. You get the stock certificates.
Correct.
That's it, right? You can't really do anything with it. So there's not a lot of secondary market for those. So
Right.
pretty much the decreases go to zero. But now if you're tokenized, now you're a token. First of all, the security token on the blockchain is by default is global. It's international. So you can send your token peer-to-peer to anyone in the world. So it means your access is not only to US now, you can access to anybody in the world. So first of all, the market is a lot larger, right? There's a lot of foreigners want to be part of the US market. If they can buy, we'll say one USD is one for $1, right? You get a lot bigger buyer pool, for instance. Secondly, because you can do peer-to-peer, so you don't even need any centralized brokerage or exchange. You can just literally have someone that want to buy it, you can just sell them right directly. So that's the big ability that you can have with, let's say, if you're LP, you have LP units in your fund. What are you going to do with the paper certificates? You can't do anything with it. So, but your token now you can sell this.
No,
now on the secondary market, there is an exchange. And silver exchange right now, the biggest one is T0. So we're talking with them right now. They don't have a lot of big volume, but they have about $100 million volume per year. So that's to answer your question. That's going to be what you're looking for. If you have a lot of money, you want to get out. I don't think that's possible. But if you're just $100, $200 small investment for non-credit investors, they can probably get out from that $100 million volume, and that's only going to increase because
it's only going to right. As mass adoption takes hold over the next decade.
The way I think about it, because now the crypto adoption is there. Every one out of 5 Americans now owns Bitcoin or have a wallet, whatever. So
is it really that high? Wow.
Yeah, I read a report from Gemini. It's really high. So, but everybody is now, because of the crash recently, they're all shifting to something more valuable. So I really think the security token is going to pick up. People are going to look at more asset-backed crypto that has the quality, have the benefit being a cryptocurrency, but also have the real-world asset backing it. Right? Imagine this: in the future, the stocks, Apple stock, Google stock, can all be tokenized, become a token. You still own a share of a company, but now instead of trading on Nasdaq or stock exchange, you're limited to 95 trading. Right, and then Monday to Friday, now you're 24/7. You can send it, you can gift your Apple stock to your friends and family peer to peer without going to brokerage. Because right now you can't gift to anyone. You have to sell the stock, get the cash back, then give to someone else. Right.
Yeah.
So this is so much advanced than the current financial system. I think in the future, I'm not saying everybody will, but I think there's a lot of the company will choose to launch or go public in the tokenized world inside of traditional financial world. So we'll see the market grow bigger and bigger. We want to be the first one, and we want to be the first one that's set the standard for real estate. So that's the goal of USBC.
Well, that's exciting. That's incredibly exciting. So outside of real estate and then crypto, is there anywhere else, Johnney, that you're personally betting your own capital? Any other sectors?
I like cars, but I'm not investing in cars. This is just toys. No, I just love real estate. I'll say
Okay.
that 80% of my assets in real estate. I just don't think there's any other things in the whole world better than real estate,
I agree
right?
with you.
Gold is good, gold inflation hedge, but there's no utility. Gold doesn't produce anything, right? Real estate produce rents, right? People need real estate.
Yep.
We need everything in real estate. We need living real estate. We need eating real estate. We need water. Gold all come from real estate. So I don't think any other asset is better than real estate. I love technology though. So there's some really good technology, blockchain being one of them. I would be interested in being investing in them. So the NFTs, like I said, the NFTs, the part of blockchain, that's really good technology. I actually invest in a gaming company that the NFT, the in-game purchase item. So all the in-game items, gears can be NFT, now can be sold. I like that part, the usability part of the NFTs, not the art collectible parts. So, but again, back to real estate. I just love real estate. I think it's the best asset. It's the only asset I know that 50 years from now is still going to be here, still going to be appreciating. I don't know if Bitcoin, the blockchain is going to be around in 50 years, to be honest. But I know real estate will be around.
Yeah, no, valid point. You made a comment that everyone needs real estate, right? And so the only pushback I have there, and it's the only unknown. It's not really pushback; it's just the unknown. And I'd love your opinion on this. Is with what happened during the pandemic, the one sector of real estate that has unknown volatility yet to still be seen at what scale is the office sector, traditional offices, and
Yes.
I know that a lot of them, big employers are pushing to get people back, right? They see some of the inefficiencies that have been created from this, virtual work environment. It's going to be very difficult at this point in time, given where the job market's at. Like people have many options. Well, this employer wants me to come back in. Well, I'm not going to work for them anymore. I'm going to go over here to these 5 other job offers, right? And so what, in a lot of these leases are, they're coming up for renewal in the next, 3, 4, 5 years. And one can definitely, I think most can agree that the general footprint of traditional office will change. It's just to what scale and what type of detrimental impact might that have in the long term. So I'd love to get your opinion on what does your crystal ball tell you in the next 5 to 10 years? What would that office sector look like?
I actually agree with you. I think office is going to go on declining. I don't know where they are. I actually have invested office before. I've sold them already before the crash happened. So lucky me. I still own a medical office, which has been
Different.
doing
I
really,
feel.
really good.
Yeah,
All my
medical
tenants
office.
paid my
I love
rents.
medical office.
Because like again, doctors, they don't care. Doesn't matter if you're in recession or not. You still have to see a doctor. Just to make their money. So medical office, I would say the one of the office that really persistent, right? And I had a retail development project. Everything's bottom up, ready to go. Construction loans, finance is approved, everything. Then the lender pulled out at last minute because of COVID. So retail has been suffered a lot too, especially those big malls, right? Have been suffered a lot.
Yes.
So I don't know where in the future is the retail and their office. What I know is residential is somewhere people are always going to need. So multifamily is our heavy focus in USPC, and also in Primior, we're now betting big on multifamily and the residential. People need to leave. You can work at home. You still need a home.
Yes.
So that's where we know there's a little bit more certainties for us. Again, like there's a lot more affordable housing issues too. So part of it is we're trying to help solve that problem as well in the USPC to provide a little bit more for the housing. Again, so we're in Orange County. Believe it or not, Orange County minimum income is so high. Even if we're providing affordable housing to the residents here, there's still good profit for the investors. So that's like a win-win situation for us. So we're now having to invest in Orange County here.
Yeah, no, fantastic. Well, Johnney, it's been a lot of fun having you here. And for those that want to learn more about you and what you guys have going on, where's the best place to find you?
So you can just go to our website, Primior. So www.primor.com for USPC. We'll have a link in the Primior website, but you can go to uspc.io. You can see it. One thing I want to mention, USPC actually right now, because we haven't launched yet, we're actually running a pre-launch survey. So you take a 3-minute to complete a survey, answer a question about your opinion on the crypto, on the real estates, and also a little bit about USPC. Then you have a chance to enter a sweepstake. You win up to $100,000 in prizes. The first grand prize is Tesla Model 3 we're giving out. So that's pretty cool. So anybody want to help USPC and also be part of the USPC community and also have get a chance to win a Tesla Model 3, you can go to your survey.uspc.io. If you have a 3-minute survey, then you'll be entered into a sweepstake.
All righty, guys. I'll be sure to put all that in the show notes as well. And Johnney, it's been a pleasure having you. I appreciate you joining us here today.
Oh, thank you, Gavin. Okay, good to see you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bob, wishing you huge success. Take care.